Hello, this is Matt on the Moon Family Sedan channel. Just yesterday I published a video indicating that Ripple is going to be issuing a public statement very soon, and it has to do with what everybody's talking about in the world of crypto, and also it's being discussed in mainstream media, but Silicon Valley Bank. I'm sure, unless you have been living under a rock the last few days, you're aware that Silicon Valley Bank has collapsed. And it was, I believe, the 16th largest bank in the entire country with over $200 billion in deposits. And it collapsed quickly. That's for damn sure. And they're heavy on the tech sector. That's who their customer base just tends to be. And tech hasn't been doing so well lately. And all sorts of firms in the tech sector, as a result, withdrew funds. The funds were not on hand in the bank because in the United States, we have what is called a fractional reserve banking system. So banks don't have to fully cover all of the deposits that have been made. Rather, those deposits can be loaned out and invested in government bonds, which is certainly what happened here. And once that was made public, then there was a run on the bank and everything just collapsed. It's a classic bank run in that sense. And it's just, the perfect storm in terms of the things that came together to make this possible, specifically with the government bonds that were purchased at a low interest rate before the Fed started hiking interest rates. And I went through all that yesterday, so I don't want to repeat all of that. But that in conjunction with the tech sector retracting and those firms needing capital, so withdrawing, that's what led to that. Now, what I published yesterday was a heads up that Ripple is going to be issuing a public statement specifically having to do with Silicon Valley Bank. And the reason that I know that is because David Schwartz, who of course is Ripple's CTO and co-creator of XRP and the XRP Ledger, was asked on Twitter if Ripple has any exposure to Silicon Valley Bank. And what he said in response was that, I might have it here. So I'll just put it on the screen. Yeah, there we go. Somebody asked, does Ripple have any exposure to Silicon Valley Bank? And David Schwartz wrote, we're going to issue a statement. I can't really say anything until we do that officially. So I think it's a virtual certainty that Ripple's got money in Silicon Valley Bank, which isn't exactly ideal. So the question is, how much? And look, and admittedly, I admit, like, total straight up, this is speculation. But we should talk through this. We should think through this because, frankly, if Ripple has a ton of money in the bank, in Silicon Valley Bank, and if things don't go well, and if they can't get those funds back, or if they can't get them back anytime soon, this could absolutely impact, in a worst-case scenario, XRP holders in detrimental fashion. And so, and just to be clear, I don't say that to cause panic or fear. I don't think that's even probable, but what I'm doing here is engaging in a little critical thinking exercise, thinking through what could possibly happen here. And in a worst case scenario, it could be very bad specifically for XRP holders, which is I kind of want to just game this out. And again, not that I think that's the most probable thing, and we still have to wait, sit tight, and see what Ripple has to say specifically about this. But if you don't have money in Silicon Valley Bank, then you just say, no, we don't have it. But if you say, if you're asked about that and they're like, we're going to issue a statement, well, and fair enough, by the way, but if that's the response, they must. How could they not? I mean, right? I'm not crazy for thinking that, right? But before going any further, I do want to be clear, I do not have a financial background of any kind. I am not offering financial advice, and you definitely should not buy or sell anything because of anything that I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto-related topics, but just as a hobby and just for fun. Okay, so what if Ripple does have a ton of funds at Silicon Valley Bank? Because mind you, last time a number was publicly touted in terms of the amount of money Ripple has in the bank, as far as I'm aware anyway, it was Brad Garlinghouse, and it may have been over a year at this point ago, but at the time he made the public statement, he said Ripple had $1 billion in the bank, a billion with a B, $1 billion in the bank. Now, which bank, as far as I know, they've never publicly stated. So, okay, now that we know Silicon Valley Bank has collapsed and the government's literally taken it over to this point, what's going to happen here? Well, what if depositors like Ripple, assuming that they're a depositor and Silicon Valley Bank is their bank, and I'm going to hazard a guess that even if it's not their primary bank, which it could be, it's one of their banks, right? That's my speculation anyway. So what if depositors like Ripple don't get bailed out? What if Ripple then loses against the SEC after not getting bailed out. So they don't have their funds, and then Ripple loses against the SEC. What if not only do they not have the funds to pay any potential penalty, but they don't have funds to appeal all the way up to the Supreme Court if necessary? What might that mean for you as an XRP holder? What if XRP itself is found to be a security at the district court level and Ripple financially can't continue the fight? Are you sure, you don't want to, look, mind you, and I'll just tell you, I'm going to share my stance in this video, and this is like a controversial topic, so let's just have fun talking about this, and if you agree with me, awesome. If you think that I'm wrong, that's fine, you can tell me too. I love debate. I just don't like aggressive, mean arguments, then it becomes not fun, but I love to engage in, intellectual jousting effectively. But if you're against a bailout of any kind, are you sure you don't want depositors like Ripple to be made whole? Because look, the consequences of such a scenario could echo throughout the industry for decades to come in a worst case scenario. And by the way, and I'll talk more about this in a second because I want to talk about things in a specific order. I'll tell you this right here before going any further. I am not in favor of bank bailouts, but bailing out banks. This is something I wish more people would talk. I don't see anybody talking about this. I'm against the bank being bailed out because they made a mistake. Government also was, the initial cause of the problem, so I blame the government too. But I don't blame depositors. I'm not blaming depositors. And so I'm against a bailout for a bank that did a stupid thing. But what about the depositors who are innocent? What about the depositors? What about a bailout for the depositors here? Do you want Ripple to not be made whole? Because they're just a depositor in this particular scenario here. And so I'm going to flesh out that concept in just a second. But first, let me say this. There may be more banks, in the tech-specific niche that get hit with bank runs in coming days, even potentially, unless there actually is some sort of bailout, whether it's for banks or depositors. If there's nothing, there could be some additional bank runs sooner than later. So, in that sense, the contagion could spread. But I am not convinced that the typical regional bank that services a wide variety of industries will be impacted. The reason Silicon Valley Bank collapsed is that they almost exclusively service the tech sector, and the tech sector has been having hard times. And that's why there was a run on the bank, as I cited at the outset of this video. But this is not the case for most industries. I'm not aware of other industries that are massively withdrawing funds from their banks. And even if they are, a bank that has a broad customer base, as many banks do, they wouldn't be feeling the harm. If it's truly diverse, you're not going to one of industry, and you cater to how many industries? So I don't think that it would harm them, especially if they don't have most deposits invested in low interest government bonds, which is what SVB had, so Silicon Valley Bank. They had these low interest government bonds, and then the Fed hike up interest rates, and that combined again with the withdrawal of funds because tech sector wasn't doing so well. That's what caused all of this. And so look, and I'll tell you right now, and I'll get into my personal opinions on bailouts just in general. I am against them. I am a capitalist. I am a big fan of capitalism. I'm a business owner. I have been for 13 years. I am against bailouts just in a general sense. Back in the day when the government bailed out General Motors, I thought that was repulsive, and the government should not be meddling in the free market system. That's just my stance, and you may agree with me, you may disagree with me. I don't think they should have done that. I think that GM should have just collapsed, and then at the right price, there would have been a buyer, and it could have been revived. You could have revived the brand. Worst case scenario, then you sell off the assets. But that's the government doesn't know best. I think that government bungles everything. I understand a general sense, and I don't think we need more government. I don't like it, and so I don't want bailouts. But here's the thing: what's happening with this particular situation is markedly different than that type of bailout, which I am absolutely against. And I'm still against the bank bailouts. But when it comes to depositors, let's break this down. So look, the federal government has forced us into our current fractional reserve banking system. And I mentioned what this is. I'm sure most of you know at this point anyway. Everybody's been talking about it. But in a fractional reserve banking system, banks don't have to keep 100% of deposits on hand. So as long as not 100% of your customers demand withdrawals, then you're fine. If just a few do on a day-to-day basis, you couldn't cover all of your customer withdrawals if they demanded all at once. And so it's typically fine. But that's pretty risky, right? And so that's what the fractional reserve banking system is. The government has forced this system on us. It is inherently risky, and I'm against it. Let's not pretend that this is the only way to do it. And I understand that every modern nation on the planet is engaging in this system. I get it. Is this literally the best that humans can come up with? Because I just don't believe it. I mean, honestly, I'm sure there are a lot of businesses in hindsight that would be happy to make sure that all of their funds are secure and if anything, pay a small fee, something. But the Fed doesn't even allow that. So look, the very nature of the system, fractional reserve banking system, the very nature of it means that at any given moment, over half of deposits in our country are not backed by anything. I kid you not, over half, or it's right around half. About half of deposits in our country are not backed by anything, and they are not insured, because in order for FDIC to cover it, FDIC only covers up to $250,000 in an account. So if you're a business, how many businesses have larger accounts? A lot. Even small businesses would have checking accounts that are substantially larger than that. And you can figure that by just imagine how, even if you're in a small business with 5 or 10 employees, what do you think a salary is? Just kind of run those numbers in your head, multiply that times 10 or whatever you think it might be. You get up there pretty quick. You're above that pretty damn quickly. So businesses are at risk as a result of the system that everybody is forced into. Again, it is inherently risky. And again, as United States citizens, we have no choice but to participate in the system. We have no choice. Inevitably, as a result of this inherently risky system, there will be times when things go off the rails, which just happened, obviously, with Silicon Valley Bank. And it's not the first time. You saw it in 2008 with Lehman Brothers, Bear Stearns. And look, I'm not saying that the banks aren't to blame at all, but let's go to the source first. I blame the Federal Reserve for this. Since the Federal Reserve is the party that caused the problem. They set up the system. They caused the problem. This is where it initiates. So since the Federal Reserve is the party that caused the problem, it should then be their responsibility to fix the problem. As incompetent as the government is, this is a problem that even they have the ability to easily solve. I mean, I imagine, look, if the government were a person, I just imagine that it would just be wearing its shirt on backwards, walking around all day, being oblivious because it's a damn fool. It's a damn idiot. If the government were a human, that's the type of human we'd be dealing with here. But even the government could solve this problem because they put money endlessly anyway, right? This is not hard for them. This wouldn't be. But the real solution is to end this system. The fractional reserve banking system, and I'd prefer that. But if I'm not going to get what I want, we're all going to be forced by the government into this precarious situation as depositors in this flawed system. So when the S word hits the fan, as it obviously will on occasion and just did, the feds better clean up the damn mess. For the government to cause this obviously foreseeable problem and then to push all of the harm and responsibility onto the innocent depositors is unconscionable. The government should not be allowed to wash their hands of this, this disaster that they caused. They should not be able to wash their hands of this disaster that they caused. And I do blame the bank because, this idea of putting over 50% of depositor funds in low interest and then just, there's no way that we could have hard times for our customers would have hard times to withdraw and a bunch of funds, and then we'd have to, provide that. And, there's no way the Fed would hike interest rates. No, you should have been aware. This was obviously irresponsible behavior. And as far as I know, Silicon Valley Bank didn't even break any laws by doing what they did. It was just reckless. But they did it inside of the confines of what was legally allowed within the fractional reserve banking system that the government is forcing on us. That's the reason I have a problem with this. And that's also why And again, I say let Silicon Valley Bank crumble. Let that damn bank crumble, because they are at fault here. But who I'm saying, who is not to blame here? The depositors are not to blame here. It is not their fault. And that's also why, again, like I said earlier in the video, I'm against bailouts in a general sense. But if the government's going to cause the damn problem, come on. It's just gross, the idea of causing the problem and then, oh, we messed this up, it's your problem now. Sorry, depositors, we wrecked your lives. Your business is gone. Oh, okay, oops, sorry. You won't even get a sorry from them, though. So look at, what did I want to pull up here? I had a bunch of tabs open here. Yeah, so I'll share this one. So this was from Eric Voorhees. He's the founder of cryptocurrency exchange Shapeshift, and I think he's a rather insightful individual. And I agree with the vast majority of stuff I've ever seen him tweet, frankly. And he wrote, "No, the government shouldn't bail out or backstop SVB, Silicon Valley Bank. Consider for a second that SVB engaged in the behavior it did in part because of prior bailouts and backstops. Let's not double down on moral hazard yet again." And you know what? I get that point. And that's why I'm saying, don't let the bank's already been taken over by the government. Don't let it live, but make sure the depositors are made whole. That way, it's not encouraging banks to be engaged in risky behavior thinking they're going to get bailed out. If that's the argument you want to make, I respect that argument. That makes sense. It makes a ton of sense. So let the bank fail, but make sure the depositors are whole and that money can be deposited at a different bank. Because, and without that too, like this whole system that's being forced on us, it's based on trust, because there's not real money backing it. It's based on trust. If the government is not going to do what they need to do to make sure that there's sufficient trust when bad times hit, then it doesn't work anyway, which is why this is a stupid argument. This is dumb. So I get what he's saying. And again, if you're one of the people that says no bank bailout, I'm with you. I'm just looking out for the depositors. Because imagine this were you. Imagine you're working for a company. The company is just a respectable business. Maybe it's a small business, 5, 10 people, 15 people. And then one day you just don't get your paycheck. Your company did anything wrong. They want to pay you. They're seeking to pay you. But the bank that, from your employer, that your employer's working with, there's a banker on it. Now they're out of business. And the government's taking them over. And then you don't get paid. How long can that company stay in business without some sort of reconciliation and making things right for the depositors? And you can see how this can quickly get out of hand. And it can spark additional bank runs. Things can get out of hand very, very quickly. And if you think that it might be reasonable to have some sort of, try and take the capitalist approach, which I am for, by the way. Again, the reason I'm not here on this issue, it's because the government clearly is the problem here. When GM was failing, GM was the problem. Right here, the government is the problem. It's totally different in that sense. And so that's why if you have the idea, and I thought this through too, it's like, okay, well, what about just having another bank just buy them out? And maybe something like that actually does happen if it magically works. And if you can find a bank that's willing to take on that debt, okay, super duper magical. But the question becomes, can you get that deal done by Monday? Because and I'll talk about that more in a separate video, but if you can't get a resolution ASAP, this thing's going to get real out of control real quick, and businesses are going to go belly up. They're going to cease to exist, and that's going to harm real families, real people. And it's because of the precarious situation that the government put us in by forcing this fractional reserve banking system on us. That's why I keep going back to them. If another company, I'm like, no bailouts, no bailouts. We're all capitalists out here. You're entrepreneurs. You failed. You don't deserve a bailout. Just fail. That's it. That's how this works. That's the market telling you did something wrong. You made mistakes. This is the government forcing this on us, though. It's different. It just fundamentally is different. And just to bring the point home here, and I came across this thanks to attorney John Deaton. There was this thread shared by somebody named Lindsay, who is an entrepreneur, started a business a few years ago. I read this whole thread, and I'm not going to read the whole thing, just the very top here, so you can get a feel for it. But it's if you are under the impression that it's a bunch of uber rich tech people that are the depositors, there are some of those. Ripple, it looks like Ripple's probably one of them, in fact. But perhaps not exclusively, right? Definitely not exclusively. In fact, look at this. So this woman named Lindsay wrote this. It's like 23 tweets, so I'm going to read the top 2 only. But she said, "Hi, I'm Lindsay. A bit about me. Ohio mother of 4. I employ a team of 15 as a startup founder and CEO of StrongSuit. I drive a used Honda Odyssey. Husband works in manufacturing. The financial future of my company, team, and family are at risk with the collapse of Silicon Valley Bank. The collapse of Silicon Valley Bank might look like a 1% problem that only impacts the coastal tech elite. Not true. This impacts small businesses made up of hardworking people making modest mortgage payments in the Midwest. This impacts parents putting dinner on the table. And so, folks, even because I see this whole argument, it's just the 1%. I'm not pretending like, yeah, of course, there's going to be some insanely wealthy people that are falling victim to this. I got it. But it's not just that, and that's not a good argument anyway, because even those uber wealthy people, they employ, like, think about Ripple. They employ what, like 700 or 800 people, I think, at this point. Those are real people with real families who aren't all necessarily rich. They're employees working at a company. So I always think that's a bad argument anyway. And so Attorney John Deaton retweeted that, and he seems to have a similar perspective to me. He wrote, "Some people were surprised I said I was torn about a bailout regarding Silicon Valley Bank. I'm not torn over anything involving shareholders or investors. That's a zero. I'm torn because of two things. Number one, avoiding complete concentration in banking, and two, thousands of stories like this one." And then he shared Lindsay's story there. And by the way, Lindsay, she actually, upon news of this breaking about the potential problems with SVB before they went belly up, she actually initiated that day a wire transfer to get their money out. And she came back to check it the next day and it failed. There was no way for her to do anything about it. She's just trying to run a business, do the right thing, an entrepreneur. And there's all sorts of individuals like that. And so to just have this, and I was debating this woman before I recorded this video, who had the exact opposite opinion. So like, I'm not a fan of government in general. You know, it just, when it comes to anything economic, I just lean right and politically. I just do. If you're talking economic stuff, yeah, absolutely. And so here I am blaming the government like I do all the time because they're a bunch of F-ups all the damn time. And so in this debate on Twitter, I was blaming the government and also the bank. And then this woman I was debating was blaming the depositors and the bank and not the government. It was like the exact opposite of it's just the inverse of what I was doing. I'm like, to blame the depositors, my God, to what degree should depositors be consistently engaging in due diligence? And even outside of that, even if you say the depositors to blame, like a lot of these are businesses. And what, is it the employees' fault too for not forcing their employers to engage in better due diligence? Is this the world we want to live in? Like it shouldn't be like this when you're forced into the system as a depositor in the first place. If everything's not going to be backed one-to-one, well, then if you're going to force that system on us, you better back it up. And so I blame the government and I blame the bank for making boneheaded decisions, and I don't blame the depositors. And it's so funny engaging in this debate. It's just this woman, just the exact opposite of it. Wow, blame the depositors, and you're an apologist for the government? It's totally 180 from the direction that I'm going on this. And so I'm sure some of you agree with me. I'm sure some of you don't, and that's fine. And I'm willing to be persuaded. Like, my thoughts on this are somewhat fluid. I've spent a lot of time thinking about this over the last couple of days in particular, because I really am so against bailouts, but it really is fundamentally different when you're talking about the government causing this problem rather than capitalism and the free market resulting in this. When you're talking about, like I said, with GM as my example, that's the free market, that's capitalism. They messed up. They should have just gone out of business and been bought out, or they should have been, Vulture should have swooped in and bought the assets and picked the company apart. So either one of those would have been fine, because government doesn't know best. And instead here, though, this is completely different, where this is a system where we're forced into it. We have no choice. If you're in the United States and you deposit, you have no choice. You're in the fractional reserve banking system. And the government knows it's risky. They know this can happen. Even if you have tight risk management and the banks being super responsible, under specific circumstances, bank runs can and will still happen. This is the government's fault first. Second, it's the banks. And it's not the depositor's fault. So that's my stance. You guys tell me if you think I'm right or wrong. I think it's fun to debate and have thoughtful discourse and stuff like this. But as far as it pertains to Ripple, that's why I wanted to bring this up in the first place, and just kind of fleshed out some of my thoughts in general on this topic. But as far as it pertains to Ripple, if you think that there shouldn't be, like, the depositors shouldn't be made whole, if that, I hope I was persuasive enough that you don't think that anymore, because I'm doing my best. I'm trying to be persuasive. But if your stance is that depositors should not be made whole, then what? So like Ripple literally they just oops-a-doodles, we deposited our money with the wrong bank and that's it. It's just game over and that's fair. I don't see how that would be fair. And you know, I get the argument where people bring up, it's like, so then the taxpayers have to pay for it, but that's the point. But the government set it up. You know, I might have had, there was one, I don't know if I have it up here. If I can find it real quick, maybe I don't have it anymore. Let me flip through this. There was, somebody had a reasonable, and actually maybe, maybe it was this one. Yeah, so there's this guy named David Sachs. I hadn't heard of him before, but he's got 591,000 followers, so I guess he's famous. I don't know, very popular. Maybe you know who he is, but venture capitalist at Craft Ventures. I just happen to not know. But he wrote the following. He said, blaming depositors for bank failure is like placing the blame for medical malpractice on patients because they didn't do a good enough job shopping for a doctor. Depositors expect the Fed to ensure that banks are safe. Now, that's not a perfect analogy, but it's pretty good. There's somebody named JB who found a hole in it, and it's a pretty good point to bring up as a retort. And he said, it was just a question, but he said, when you sue a doctor for malpractice, does your settlement come from taxpayers? And so obviously the answer there would be no. So it's not perfectly apples to apples. But so I just responded with the following: no, because that's true. Like, the settlement doesn't come from taxpayers, and in this case, it would come from taxpayers. But again, the government creates the problem. It's like, So I wrote no, but it's also the case that every depositor in the United States is forced by the Federal Reserve into a system called fractional reserve banking, which is inherently risky. Depositors did not consent to participating in this risky system. Rather, they have no choice. And so think about this. It's always government screwing stuff up. But if there isn't trust and confidence in the system, then none of this matters anyway. None of it, because the whole thing falls apart. This whole thing is a trust system. So you do what you have to do, since it's a bogus, BS, flawed system that shouldn't exist, not in this form. Since it is, though, what you have to do, unless you want things to completely fall apart, you've got to make sure that people are able to retain that confidence. It's just what it is. And I don't want the system. I don't want there to be bailouts even for depositors. I don't want that to happen, but I'll take that over the alternative for sure. I don't want that to happen. If I had my way, then this system wouldn't exist in its current form. Federal Reserve banking, no. You do the responsible thing, and don't tell me an economy can't exist. There wasn't always fractional reserve banking. Don't tell me it can't exist in that way. It's just a quick way of spurring the economy, and I get that. I understand why it's attractive, because every time there's a deposit, you loan out like 90% of it up to that, and then that basically creates new money, and it spurs economic activity. I get the appeal of it. But then this happens, and you can have entire economies collapse, and they have, and historically, as a result of this stuff. Playing with fire. Let me know what you think. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea. Until next time, to the Moon Family Sedan.